Hi guys, welcome back to another one of my videos. Today we'll be looking at financial statements for beginners. One of the first things that you see is an income statement, which will show a company's profit and loss. One of the first figures that you see is revenue. Sometimes it's put down as sales. Now what I'll do, I'll link it back to a lemonade stand to make it nice and simple. So if I had a lemonade stand, my revenue or sales is going to be from selling lemonade. So let's say I made 100, we can call it dollars, pounds, it doesn't really matter. We just call it 100 from selling lemonade. Now, there's something else you have, cost of revenue or cost of sales. These are costs directly related to your revenue. So in our example, the cost of revenue making the lemonade is going to be the lemons, the sugar, the water, direct cost associated to that. So let's say that's 55. That means our gross profit is going to be our revenue minus the cost of revenue. And remember, these have to be direct costs related to the revenue. So it leaves us with a profit of 45. Now our gross profit margin, that's going to be 45, our gross profit, or divided by our revenue, which was 100, gives us as a percentage 45%. Okay, so that's the first part of your profit and loss statement. The next bit that you'll see is the operating cost. So these are costs indirectly related to the revenue. So it could be things like staffing costs, the cost of electricity for our lemonade stand, the cost of any marketing that we've done. So what are known as operating costs. Let's say our operating cost for our lemonade stand is 10. I'll just put in brackets to represent a negative. That leaves us with an operating profit of 35, because in the previous part our gross profit was 45, so we've minused that off. Now that leaves us an operating profit margin, which is going to be 35 operating profit divided by your revenue, and it leaves us with 35%. Okay, which is looking still pretty healthy. However, we have not taken into account any tax, because in the UK, America, wherever you are, generally most countries will have tax, and we've not taken into account any interest. So to open up this lemonade stand, I might have taken out some sort of loan. Okay, so interest will have to be paid on that loan. So we can say the interest on a loan that I initially had to start the company, my lemonade stand, is 5. That leaves us with a profit before tax of 30. Now we also have to pay tax, so let's say the tax is also 5. So profit after tax is going to leave us with 25. That leaves us with a net profit margin, because we paid our tax, we paid our interest, which is our profit after tax divided by our revenue, and it leaves us with 25%. So as you can see, if we just take this, it's looking very, very good, 45%. You know, the company is really looking really healthy. However, we look at the operating costs, and that leaves us with an operating profit margin of 35%. And once we include our tax and any interest we have to pay, it leaves us with a net profit margin of 25%. So don't always just look at this big number and think, wow, the company is doing really well, let's buy some shares in it. Now, after all this cost, one ratio I always like looking at is earnings per share. They use the net profit margin for the earnings per share calculation. All you have to do is take this number, so 25, that's your net profit margin, divided by the number of shares in issue, and that will give you earnings per share calculation. So that's how they work out the earnings per share calculation. It's a useful number to have. Now, right at the bottom of the statement, you'll see a section for dividends. Okay, because we have shareholders in our lemonade stand. Now, we decide to give half of the profit as dividends. So if our net profit was 12.5, we're going to give 12.5 to our shareholders. That leaves us with a retained profit of 12.5. Now, there's another ratio that you may use when you're investing in shares. Is called the payout ratio. So the payout ratio in our example is going to be 50%. So that will give you a more informed choice of if it's a good investment or not to buy shares in whichever company you're looking at. Now, just one thing to be aware of, if we go back to our operating costs, in company statements, you might see for your EBIT, earnings before tax and interest, there's something called depreciation and amortization. Okay, that is literally the depreciation of machinery. So in my lemonade stand, let's say I've got a juicer, that juicer is going to depreciate over time. So just be aware they may be buried within your operating costs. I hope you enjoyed this beginner's guide to income statements. I'll put up a few more videos, one on cash flow statements and another one on balance sheet. Please like and subscribe, and I look forward to seeing you in the next video.